advisor to the Mapfre AM US Forgotten Value Fund. Jonathan, thank you so much for having us these few minutes.
Well, thank you for inviting me on. I very much appreciate it.
Jonathan, this week we remain expectant before the ECB next monetary policy meeting. Markets pricing another big hike of 75 basis points. Are these 75 a done deal, and where could the ECB stop these hikes?
Yeah, no, that's an excellent question. That's certainly on the minds of all investors. But what I really think investors should be focusing on is what they own and and the opportunities out there. The central bank's going to do what the central banks are going to do, and it has created a tremendous amount of volatility, but also a tremendous amount of opportunity for stock pickers like myself to buy stocks that are significantly undervalued, that have great long-term potential, but because of the geopolitical economic turmoil that we're facing, have gotten down to bargain basement pricing. So I view all this as an opportunity, and there are a lot of sectors that have been unduly punished that I think will be actually beneficiaries. You know, the biggest holding in the Mapfre Forgotten Value Fund is Bank of America, and as their results showed last week, they were significant beneficiaries of a rising interest rate environment.
Mm-hmm. And about these investment opportunities that you have in focus in the Boyar Value Group and in the Forgotten Value Fund, whether you see value at this point?
Oh, they're all over the place. There are many stocks that are down 75–80% from their value, from their highs, that are never coming back. That just should never have gotten there to begin with. But there are a whole host of businesses, you know, something like a Bank of America that has gone from, you know, over $50 a share to $35 that are big beneficiaries, as I said, of a rising interest rate environment. Cisco Systems with a CSCO, which is trading at a very modest multiple, especially compared to the market. You know, there's lots of businesses that are on sale. And for some reason, stock market investors don't like to buy things after they go down in price, unlike everything else. So, you know, we're quite excited. There's Madison Square Garden Sports, where you can buy the Knicks and the Rangers for $3.9 billion, which is significantly less than they're worth. So the opportunities are really out there if you're a long-term patient investor.
If you are a long-term patient investor, as you say, if we talk about technology, this week is really important. We will see results of Apple, Amazon, Alphabet. Meta is one of these funds. We talk always about this concept. What can we expect about technology this next month?
You know, those are names that, you know, we have generally, except for Alphabet, have stayed away from. Meta is a company that's obviously statistically cheap, but, you know, their earnings over the next couple of years are suspect. We have no idea, you know, what that company is going to look like 2 or 3 years from now. But a company like Alphabet that has a fantastic moat around the business and has, you know, great franchises like YouTube, etc., is something that we're pretty excited about their long-term prospects, and the fact that you can buy them at only a slight premium to the market is pretty impressive.
Is cyclical are cyclical companies more attractive right now for you?
We take it by a stock basis. You know, we generally don't like cyclicals because you have to be right twice. You have to be right when you have to buy it, and when you have to be right when you sell it. We like to buy stocks for the long run and that have very long runways for growth that are just mispriced. So we just look, you know, I think probably the cheapest area of the market right now are the small and mid-cap spaces. Many of those stocks are down 60–70% from their highs, have great businesses, but are all but ignored from the investment community. So that's where I would be looking, as well as to some of the financial names as well.
And in this long-term investment that you manage, which are the companies that can be more resilient if we talk about a recession next year in the US?
Yeah, no, I mean, you have to look at their balance sheet and their financial statements and make sure that they have the luxury of time. So there are names that we have that we own, let's say like a Warner Brothers Discovery, that are highly levered, but they took advantage of the low interest rate environment and structured their debt to most of it to be fixed rate and most of it to be due past 2040 or so, 2030, 2040. So they have the luxury of time. So, recession. The good thing about recessions is they end eventually. So you want to be able to buy things that are able to withstand the temporary pain and be able to survive and get to the other side. And that's what we're doing, and that's how we're positioning our portfolio.
So, which is your main strategy right now? Be cautious, because we are seeing how fears of a recession are increasing. When we talk about long-term investment, which temporary frame are you talking about?
I'm talking 2, 3, 4 years from now, and I think that people who are buying these stocks that are, intrinsically undervalued, that have great long-term prospects, are going to be very happy that they bought them 2 or 3 years from now. What happens over the next 6 months, I have absolutely no idea. Stocks can go up, stocks can go down, but in the long run, if you buy something for significantly less than it's worth, generally good things will happen. But there also has to be a catalyst, something that's going to make the stock appreciate in value over a reasonable period of time.
Thank you so much, Jonathan Boyar. It's been a pleasure.
Thank you so much for having me.